Dogecoin is dead, DeFi is the future of crypto. Hello guys, welcome to our channel Crypto Flyer. Twitter CEO Jack Dorsey revealed that Square, his financial company, will launch a new platform to create decentralized finance projects using Bitcoin. You would be forgiven for not giving Dorsey's announcement the attention it deserves amid the usual, constant online noise about cryptocurrency. Looking at you, Elon Musk, these days. Square's project may still be remembered as a turning point. It was the moment that decentralized finance, or DeFi, finally became mainstream. DeFi has been one of the most important developments in the recent history of cryptocurrency. Its rise has been closely linked to Ethereum, the second largest cryptocurrency in the world. Ethereum's decentralized network, or blockchain, allows for services and execution of more complicated tasks than sending and receiving money. It all began after 2017's eco boom, when thousands of entrepreneurs and chancers raised billions of dollars by selling crypto tokens online like stocks in, sometimes non-existent, companies. Ethereum began to crawl with a variety of services, called dApps or decentralized apps, that offer a wide range financial operations. These include loans, futures, exchanges, and algorithmic trading. Disintermediation was the selling point as it is with cryptocurrency projects. Users of these services would be unshackling oneself from real-world financial intermediaries, but also from cryptocurrency-focused institutions that had evolved into gatekeepers, from corporate cryptocurrency exchanges like Bitfinex and Coinbase to Tether, the company behind the stablecoin USDT, a digital asset whose price is theoretically pegged to the dollar. The decentralized financial apps that Ethereum offers allow users to trade without the need for identity verification, anti-money laundering regulation, and other restrictions of centralized options. It was also much more enjoyable. DeFi offers many benefits. Number 1, it is theoretically up 100% of the time. So Ethereum is always up. DeFi is also, like Sokolin, co-head decentralized protocols at Consensus, a blockchain software company, says. Then there's composability, which is the ability to layer. This means that different applications can be programmed on the blockchain to run in sequence in one transaction. Each operation is arranged and stacked like Lego blocks. It is possible to create a program that automatically borrows cryptocurrency from a lending platform and then dumps it on a decentralized marketplace in the hopes of making it price fall. Then, you can buy it back, return it, or maybe pocket a small margin. This could be done in just a few seconds. Investing strategies are like puzzles. Sokolin states that you can build a portfolio. When you have the portfolio, you can build margin. Interest can be built when you have margin. Once you have interest, you can build an aggregate of fixed income and tokens. This accelerates everything and makes it move really fast. I believe it goes 50 to 100x faster than if it weren't built on DeFi. This is exciting, but it can be complicated. People are creating really interesting, but mostly experimental tools. These tools are mostly being constructed by amateurs who don't understand actual finance, Emin Gunsayer, Associate Professor of Computer Science at Cornell University, says. He is also the founder of cryptocurrency company Ava Labs. These Lego building blocks are very interesting and can do things Wall Street can't. Some of them interact in unexpected ways. One of the first and most infamous manifestations of this unpredictability is the flash loan incident that sent waves through cryptoland on St. Valentine's Day 2020. After deliberately manipulating asset prices on the DZX exchange to obtain its pricing data, an anonymous trader made a profit of $350,000 in Ether. What's the best part? The best part? The trader had made a lot out of nothing. The debate raged about whether the trader should be called a hacker or someone who simply understood the fine print and decided to act accordingly. The following months, what with the chaos and panic around the global pandemic, coupled with several regulatory crackdowns on centralized cryptocurrency exchanges, only made DeFi protocols such as MakerDAO, Uniswap and Compound more popular amid the cryptorati and the budding investors. Late 2020 saw the yield farm concept become the most popular thing in DeFi. This allowed users to deposit other tokens on centralized lending markets and earn new cryptocurrency tokens. That lent itself to the usual crypto-adjacent zaniness, projects hyped to the moon and then immediately crashing, memes and food emojis that, well before the GameStop craze and Elon Musk's romance with joke-turned token Dogecoin, have been traded like precious assets, and of course the occasional scam. Ecos are no longer. However, the scramble for governance tokens and a piece in DeFi protocols was deeply reminiscent of 2017. Research suggests that people who engage in this new gold rush may be more financially literate than those who lost their shirts during the eco frenzy. DeFi protocols were supported by $1 billion worth of cryptocurrencies in December 2019. By August 2020, that figure was close to $5 billion in Ether and Bitcoin. Today, the value of locked Ether only has skyrocketed to over $55 billion. It is impossible to predict where this will lead. Carl Florsch is a researcher at Ethereum Foundation and believes there is a risk of a cascading disaster that could end it all. He cites DAI as an example of the DeFi ecosystem's main asset. It is a stablecoin issued by MakerDAO and roughly pegged to USD via crypto collaterals. Let's suppose that MakerDAO becomes massively over-collateralized, Florsch states. And all the systems that depend on it go down, and everything goes down. Although there are some more serious risks, such as regulation and massive internet censorships, I don't believe those are as significant as a market failure. These projects are experimental and crazy. They are risk takers, honest to goodness. Jamie Berg, Outlier Ventures UK CEO, believes that DeFi, despite all its buccaneering, will eventually mature and be incorporated back into mainstream finance. I see DeFi as a sandbox. I have a concept. That concept can be tested and validated. In this decentralized sandbox, I can understand its economics. He says that once I've done that, I can raise money and hire lawyers. Ultimately, if you want mainstream users, the reality is that the average person wants the insurance policy of a regulated product. Some decentralized finance protocols are indeed moving in that direction. Ecos are a great example. Everyone is for ecos and low regulatory burdens as long as they make money. Guess what happens when they start losing money? They are now eligible to file class action lawsuits. The idea that DeFi will create a parallel system in some way is absurd. The most important consequence of DeFi's boom is its ability to take Ethereum by storm. Its blockchain now feels more like an LSD-fueled online Wall Street. The rise in NFTs, which are often traded on the platform, did not help to dispel this impression. This frothiness has led the project's developers to wrestle with questions about scalability, speed and liquidity. These questions have been around for a while but now have a greater urgency due to the volume of transactions and money flowing through the platform. One solution might be the adoption of add-on sidechains on top of Ethereum's main network. In addition, the Ethereum project is undergoing a gradual transition to a new architecture called Ethereum 2.0, or F2. The Ethereum project is also undergoing a gradual transition to a new architecture called F2. This will see the end of proof of work. Nodes verify transactions by not burning electricity by mining but by paying a small amount of Ether. If they pass through an invalid transaction, this will result in a big change. Other major changes, along with proof of stake, are part of the restructuring that aims to eventually increase Ethereum's transaction speed to 100,000 per second. This is an increase from the current 15. The next big question in crypto is whether Ethereum will continue to be the DeFi ecosystem of choice, or whether it will shift, partially, as one could suppose, due to projects like the one Dorsey has announced, but that remains to be seen. DeFi is a last resort for crypto's early decentralized currency yen, even as it becomes more institutionalized. This paradoxically is still worrying the major players. A few months ahead of its $86 billion IPO, in June 2021, cryptocurrency exchange Coinbase announced in an SEC filing, "We do face significant competition from parties ranging from large, established financial incumbents to smaller, early-stage financial technology providers and companies native to the crypto economy, such as decentralized exchanges." Thanks for watching. Please like, share, subscribe our channel.